following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. But you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create new agreements based on respect and love. Take the responsibility to make new agreements with those you love. And if an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We have the Dow Industrials down 385. NASDAQ down 69. S&P's off 30. We go over to the Dow Industrials first. We take a look at the Dow, what you're going to have inside the Dow. Bottom line is that you only have one stock that is in the positive, and it's in the positive by 41 cents. The biggest mover that's pushing the Dow down is United Health. That's down $10.70, pushing 73 negative points into the Dow. You got McDonald's pushing 41. You got Goldman pushing 33. Bottom line is that we get some juice on the way down out here today. The United Health deal, if we go over to the United Health, folks, and take a look at United Health, what you have with United Health, this is a monster, man. This thing just came off the highs, and if you want to see a high with no volume whatsoever, United Health had it. They had 2.5 million up there after the last time we had any volume was down at the price point of 226, which I expect it's going to go 231 actually, with 6.5 million. So what that's all about is that you had J.P. Morgan, you had Berkshire Hathaway, and Amazon coming out saying that they're going to do a joint venture first to basically tackle health care for their companies. I suspect what you're going to have after that, well, let's just look at this for a second. So J.P. Morgan has 252,000. What's going to happen with Berkshire Hathaway, it's not going to be the same because what you're going to have there is that it's going to, I suspect what he's going to do, no, that's good. Okay, so he puts them all together. 367,000 in Berkshire Hathaway. And then on Amazon, 541,000. So you're talking about monster numbers just to get going. And I suspect if it turns into a good business, which in the healthcare business, I suspect that's going to be pretty easy. The thing that's intriguing is that when you're actually looking at Amazon, when they've been in the basically looking to get in the drug business, period. So simultaneously, it looks like they're going to cut two middles out. They're going to cut the drug part out. If they cut that out, that collapses the spreads. Now, if they cut the actual healthcare middle part of it out, that's going to be a big number. So bottom line, that's what's hitting United Healthcare. Gold contract. Gold contract's down $2, trading at 13.38. We have silver trading at 17.12. Notes and bonds. You get the 10-year note down 5 ticks, 121.20. Let's go over to the note market. Note market right now, we hit a low today of 121.17. Well, we'll see what happens here. It continues to test the lows of yesterday. Lows of yesterday, we had 1.9 million contracts, 121.18, and we hit 121.17. Not much strength there, though, but bottom line is that you just have tested that area, and you do have lighter volume out here. Gold dollar index. Dollar index is down $1.31, trading at 89 right now. We got the euro at 124. The yen is trading at 108.75. We go take a look at the NDX 100. Volatility inside the NDX. This is what you have inside the NDX. NDX, the leader out here is a win. That's up 4%. You get Workday up 2.8. Comcast is up 1. Taken away from it, Maximum Integrated is down to 6.5%. You got Walgreens down 5%. Pace Car is off 5%, and Mylan Pharmaceutical also off 5%. Some of the higher volume stocks that we have out here, you have Bank of America down 36 cents. Apple is down 130. Let's go over to Apple. So Apple's going to be coming out with their numbers this week. Apple has been coming down 5 days in a row, all with volume, each and every day. You know, Apple was trading out at 180, let's see, 8 days ago. You broke the bottom of a consolidation, which is the 166, well, we're right at it, actually, 166.46, and you're going to have volume on this break. So what that sets up inside Apple, folks, is that sets up, it'll go back to the breakout area when it broke out between the 26th and the 27th of October, that's 158. So this is going to be some good volatility out here. Facebook, we're going to take a look at Facebook. Facebook is going to be coming out with their numbers tomorrow after the close. That's up $1.48, and that's in a consolidation also. So Facebook right now, yeah, that can go test 177. What Facebook just announced, just before I got on the air, actually, is that they are not going to be taking any ads anymore. Let's see, for cryptocurrencies, for Bitcoin, tokens. That's bottom line. So they're going to try to get their head straightened out. Let's see what they say. Facebook is banning ads on social media to promote cryptocurrencies' initial coin offerings. The policies will be intentionally broad while Facebook works to understand which ads are deceptive or misleading from companies not currently operating in good faith. If we go take a look at the Bitcoin, Bitcoin right now is trading down $1,094 XBT. Let's see what we got here. This has been a one-way shot on Bitcoin, no doubt. Okay, so you're going after the last low on Bitcoin. Bottom line is that what Bitcoin does have, so low we're talking about, it has a spike low from the 17th of January, 91.85. We hit 97.73 so far today. I expect what you're going to see is Bitcoin is going to get into this. There's a monster gap at 83.28. Now, if you come down to this gap, folks, this is what's really dangerous in Bitcoin. So picture, you know, you had a move that was extraordinary. We all know that. You come down 50% thus far. 19,500 is the high. You break into this next level, the 8,300, and if you have any volume, we're going to be down to 4,000. It's going to be one of these stories that are going to be told for a long period of time. Dow Industrials right now down 350. Nasdaq's off 59. S&P's off 26. Stay right there, man. Mr. Basil Chapman's coming right up, folks.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down to 345. You get the Nasdaq off 58. S&Ps are off 26. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil's got a great program here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. You can come over to our website at TFNN. Test drive The Opening Call, 30 days money-back guarantee. You just go to newsletters. Trading newsletters, you'll see the opening call right there. 30-day money-back guarantee. Basil Chapman, what's happening?
Hi, Tom. How are you?
Well, I think the market went to the paint store, but they decided to change. They got some red instead of green today.
All of a sudden, they ran out of green paint. Can you believe it? Yeah.
It's about time. Well, we'll see. We'll see. We got another, what?
The days, yeah.
Yeah, we got another 40 minutes coming to the close. Right.
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 You know what's very interesting is that if you're looking at this chart on the left, this is the daily in my work, the daily Dow. In the middle is the weekly. On the right is the monthly. And right here is the 120-minute chart. The 120-minute chart gave a peak E-top in the Chapman wave. The 4th and 5th peaks is where we start to get a little careful.
Okay.
There could be a change of trend. So now what we've got is you cannot always consider these short-term charts to be the rudder. That's where you start to get a turn in the momentum.
Yes.
But the tide itself is the larger thing. So if it's just a little minor turn, it's only going to be short-lived. But at this particular point, you've got the 120-minute chart in a sell mode. I can't call this a sell signal yet on the Dow. So sell mode is a much stronger signal. In this case, we haven't even got to a sell signal. I have to wait for the end of the day. I have to wait for the MACD, the moving average convergence, divergence to cross negative. Right now, it is just, I can tell you that it's at 456, 458. It is just about to cross negative, but it hasn't crossed negative. And the slow stochastic is still way above 80%. It's at 90%. On balance volume, the blue line is turned down. So what I've been saying to subscribers is it's either going to be speed because it's so quick, or it's going to take time because to get all the way from it, the stochastic was up at unbelievable 97% just a few days ago when it hit the high on Friday. So to get down below 80% where I always start to see a negative connotation technically in the chart that I'm following, that's a lot of points. So here we are. We've gapped down very sharp. We had a very ugly session yesterday. Well, it felt ugly. In fact, the day before, the Friday was up 225 points. So yesterday's 188, whatever it was, moved down. Didn't even take it. It was an inside day because it had a lower high and a higher low than the previous session.
Yes.
However, now we've gapped down and we're under the 9 EMA. And that says that, for me, it's now getting a lot easier. It says that the 120 minutes started to move down. The daily is following, hasn't yet confirmed. It's very close to confirming. That is a sell signal, probably going to sell mode if there's a deeper pullback, if there's a close below 26,000. I'm just trying to make it as simple as possible. But if there's, say, a very good response to both the Fed tomorrow and maybe the speech tonight, I can see a bounce. Can I see a 330-point bounce? I'm not sure about that. But it does say this week you've got somewhere into the 26,320. Above that, this week would be very good action. Anything less than that says, uh-oh, we've started a consolidation. So what I've done for subscribers to my opening call is, for a little while now, we've been looking at infrastructure. We've been looking sort of under the radar. We've still got our Bank of America stock in the financials. It's done very nicely. But what's really interesting is that you remember I spoke to you about a week and a half ago. I said we're in a stock called Chicago Bridge and Iron, CBI, and it's done very nicely. It's at 21.25, having an up day. It's up 20 cents. It had made that peak D at 21.94 just a few days ago. We're in at $17.01. It's now at 21.25, so it's a very nice gain, and it's holding. And I've been trying to emphasize for a while that in the portfolio that we have for subscribers, we're trying to have something that has the potential to go against any, or at least hold better if there is a big market turn down. For instance, CMEX, which is a Mexican cement company, CX is a symbol. It's trading up 11 cents, up 1.33% today at 8.40. We're in at $7.80, so it's a very nice percentage gain. It's over the 200-period moving average in the day. It's over the 9-period moving average. There's a pattern that I always look at. You can see this very long-term trend line resistance. I'd like to see it over the next week or two, try to get to the 8.60s. That'll start to break that resistance. So I think this is just a time to be very careful, to raise some cash. We have started a short position. We are short the semis. But at the same time, I think that we're going to see how the dollar holds, how gold is acting. Gold is acting quite well here. The dollar tried to rally, and it couldn't sustain the rally. What I am a little concerned about, and I've spent some time on my show, I wonder if I can get it now without messing everything up. I'm going to give it a try. So this is the long-term chart of what I call my show to my subscribers every Saturday and Sunday when I start sending out the charts for Monday. I always show what I call my triple yield chart, and that shows the 30-year T-bond yield, the 10-year T-note yield, and the 5-year T-note yield. And what's really interesting about that, here it comes, you'll see that in this particular chart right here, the white is the 30-year, the brown is the 10-year, and the cyan is the 5. So in my work, looking at Ds, the weekly chart of the 5-year is only in leg C to the upside. That portends higher prices. We're in a leg D in the 10-year, but it's way above the previous highs that were made back in 2017. And the 30-year is just broken out in leg C. So you've got the 30 and the 5-year in leg C, suggesting they should still go to D. So I think that we're looking at higher yields at this particular point. And that's one of the reasons why I had mentioned to subscribers that we've got to be real careful looking at, say, the home builders. You can see the home building index, the Philadelphia Housing Index, the HGX, pulling back very sharply today. It was just at 369 last week, and this week it's already at 350. That's a 19-point pullback. That's a very quick pullback because this has been on an upward tear. Of course, if you look at it historically, this is just an eye blink. It's just a mere little blip to the downside. But it is the start, I think, of saying that
higher rates. Yep.
Right, that there are higher rates to come. At least that's what the technical work says. We don't know what the Fed's going to do tomorrow. But I think that with the way the economy is going, I think their tendency now is to say, yeah, let rates go a little higher. Historically, they're still very, very low.
Yeah, it's going to be interesting to see. You know, we have Yellen, of course, is the last meeting tomorrow.
Last week,
and then the real question is Powell's coming up next. And the bottom line is that we'll know pretty quick, because the next meeting right after this, folks, is going to be March 21st.
Do you have a sense of Powell? I'm not sure. Is he a dove or what?
It's been status quo. I mean, he's been on there. He's been a governor for a long period of time, and he never bucked the you know.
He's never really changed opinions, right?
No. You know, I think it's going to have more to do with what the administration is going to want.
In money, yes.
Yeah, every administration, folks, never wants rates to go up. That's the bottom line. That's a normal occurrence.
Yeah, right.
So we're going to be hearing a lot about that.
And about hopefully my infrastructure stocks.
Yeah, let's go over to you come over to our website, folks, at TFNN. Go to newsletters, go to trading newsletters. You can 30-day money-back guarantee. Test drive the opening call. Basil, thanks so much. Have a great one, a safe one. Look forward to the show tomorrow.
You too, Tom. Thank you very much.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over to take a look at Exxon. When you hear this, this is pretty intense, folks. What Exxon was putting out today, it's pretty amazing, actually. And what's amazing about it also is that you have Exxon down $1. You have oil trading down over $1. And when you take a look at the chart, it's like, okay, you know, last 5 months we've gone from $76 up to $89. Big number, right? Bottom line, it looks like a big number until you actually bring it back. And when you bring it back, you're going to see that we've been in this consolidation for a long period of time, going all the way back to 2007. But here's the news. So, you know, you talk about oil. Holy cow. So Exxon, they expect to produce all in. This would be all in. So picture what this is. All in means that you do the exploration, you develop the wells, you pump the crude from the Permian Basin. Now, this is the Permian Basin. They bought this off the Bass family going back about 7 years ago. Check it out. All in, folks, they are saying that they are going to be pumping oil out 600,000 barrels a day at $15. Yes, you heard that correct. $15. That's now the thing is amazing. When I first was looking at the story, it's like so picture this. Right now, Exxon pumps 3.9 million barrels across the world. Bottom line, 600,000 barrels for 7 years is a monster. And evidently, inside, so the 600,000 barrel target is higher than the farmer plan that they announced in March. The wells in North Dakota, they expect are going to pump 700,000. It doesn't say what those cost them, but the $15 was it just blew my mind, man. It's pretty amazing. They plan to spend $50 billion in the next 5 years in more exploration. You're getting $15 oil, and oil is trading out here right now at the $65 level. Yeah, you want to get as much oil as you can get and pump it out as fast as you can. Right now, yeah, we're at the 64.52. If we take a look at the oil market, this is what actually probably hit oil early this morning. Oil's down with 1.8%. That's still nothing, though. That's still nothing in the context of where we have come from. Pretty amazing, though, when you think about it. Chevron's also ramping up investment in the Permian regions. They have earmarked a $3.3 billion. Everyone's going to be out there. You know what's the amazing thing when you think about it is that just think it was about 15 years ago, and people were talking about peak oil. Peak oil, all right. I mean, it's out of control. We get lots of oil. Let's go over to good old GE, right? GE, once again, showing its hand. GE's down 33 cents. You're at $15.95. Your swing point's $15.80. I expect more than likely you're going to see this is going to basically get pumped up. It's building some cars. They're trying to break that low. GE is one of the you know what's intriguing here when you think about it. And so you had GE. I think there's many people that thought, no, there's no way that GE is going to cook their books. There's no way GE could get this low. There's no way GE could do this, that, and this. And I don't blame them, because the bottom line is that, it's been the first company. It's the only company that's left in the Dow Industrials. What happens, and this is pretty wild how this shakes out. So you had GE. They were writing off the aspect of long-term health, right? Long-term health care, Genworth. That's my take is that that's the first one. There's going to be a lot more coming down the pike, because anyway, that's my take on it. Yesterday, what ends up happening is you have MetLife. MetLife, bottom line, turned around. They couldn't even tell you at their earnings yesterday what they actually were going to make in the bottom line. The amazing part about it is that they waited till the earnings came out. So MetLife went from 52 bucks. It's trading at 49 right now. Monster volume, 25 million shares after making a high with 5 million. You can see people just want out, because what tends to happen in this business is that you first get-go out, whatever they say in the first get-go out, there's always more. When you start messing with the books, the bottom line is that these companies are so big, so large, that it's not just going to be one aspect of it. And inside the MetLife challenge also, It has to do with, how do you basically book revenues? And the bottom line is that, this has to do with the amount of reserves that they have inside their pension plans. Last month, let's see, so MetLife will set aside as much as $575 million and delay its fourth quarter earnings after revealing an SEC probe into missing pension payments. Last month, the group said tens of thousands of customers hadn't received pension payments and cautioned that it would need to strengthen its capital reserves as a result. That's pretty intense. They didn't receive their pension payments? Holy cow. The Enforcement Office of the SEC made an inquiry about the matter. MetLife, to date, is not aware of any intentional wrongdoing. It's amazing, intentional wrongdoing. How the heck can you basically not do something intentionally when your first write-down is almost $500 million? Yeah, it's all these companies, it's always the same number, folks. And what it is that you have accountants that sit around, and these are high-end accountants that get paid huge amounts of money as to the aspect of how much can we get away with and what number can we put on the liability. That's what it comes down to. In the GE case, okay, it got pretty more intense, actually, because they were saying, what number can we put on the asset? So the GE, in the MetLife case, it's what's the number on the liability. The liability mean, of course, they owe out to their pensioners, or any type of pensioners that I'm sure that MetLife can hold a paper on a lot more than just their own pensions. On GE's case, it had to do what is the liability, what is the cash flow. So that was on the other side of the asset of the balance sheet. The amazing part is that with plenty of stories all the time about the aspect of GE's books were very hard to read. What I can't quite understand, I never dug into them, but the bottom line, what I couldn't understand is that why all of a sudden when one thing hits, all of a sudden you can see one of the biggest parts of their business, okay, it contracts on power. And that's where the amount of deception has taken place. And what that deception is that they have contracts that are 20 to 40 years. They can book profits that they never got cash. And then going forward, all of a sudden when they get in the cash in, guess what? They said they made $100. Oh, now they get $5. They said they made $200. Oh, we got 10. Bottom line, when it comes in, nothing's there. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at New Gold, NGD. The low in New Gold's 239, the high's 425. You've done 6.7 million shares today. Okay, so you're coming into the lowest swing point. Let's put this on a weekly for a second. Okay, so yeah, 293. I expect 293 could get tested. That's a high volume swing low. You know, with saving, you know, this right here, I mean, the danger is that 239 can get tested. Thus far, what has happened, that 239 is the low of February 3rd of 2017. What's happening is that that's been a consolidation since. You know, now if you get a rejection at this 293, it'd be really cool. The reason being, as you can see, they're slightly higher every time. If we go and look at the GDX and see what we have happening inside the GDX, inside the GDX right now, we have, okay, this is good. Wow. Actually, the GDX, we got to wait till this close out here because we have 27 million shares now. We came down with volume yesterday. It came down with 59 going against 58 and 38. We want to see less than, well, it looks, yeah, okay, 17 minutes. We're going to get less than 58. That's good. That's the bottom line. That's good. I'd like to see if we could just get pumped up slightly. We'd get a rejection of lower price. Who do we have on the phone?
Hi, this is Stephen from Trumbull, Connecticut.
Hey, Stephen.
About Lululemon.
Thanks for calling. Appreciate it. Lululemon?
Yeah, it's my wife's stock, actually.
That's a beautiful thing. Let's take a look. It's LULU. So Lululemon trading 79.49. Put this on a monthly. Oh, nice. Okay, so you're at the top of the consolidation. You're going to need a lot more juice here. You can see this has been up here for a long period of time.
Yeah.
Let's see when they're coming out with numbers.
I think next month.
28th. March 28th. Okay.
Real numbers, I believe.
I would let it. This is wicked when it's your wife. I mean,
Yeah.
I'd tell her to take some off the table, man.
Yeah.
You know,
She swears by this stuff. She's like, she went out and bought some more Lululemon clothing too after her stock went up even more. So
listen, that's great. I think I think they get great clothing. They do, and it's been a great company. I mean, it's just what you have here is that when this thing went south in 2016, it started there at 81. You know, you had one leg down at 55, nice counter trend bounce to 72, took the next leg down, and you got to 47. And when you're coming into, like, we're coming into 31 million on a weekly, And we
It's going
came
to need
in.
a real big kick. It's going to need real killer earnings to bust that up.
It is. Well, yeah, because you need some big buy-in, you know. And if I put it on a monthly, you can see that's even heavier. On monthly, we had 123 million on the way down, and we're coming into that with 43. You know, so it's those folks up there that are still looking just to get their money back.
Yeah, but if they bust with the retail numbers, I think they will. I think it's going to bust into the 90s. But again, you need to really knock it out of the field. But when I went to Lululemon over the summer in Westchester, I mean, over the Christmas, oh my God, it was like a madhouse.
Yeah.
A madhouse.
Well, listen, I understand, you know, you're making the, you know, the fundamental case because and when you look at the, you know, the numbers, they took in 1.6 billion in 2014, 2.6 coming this year. And that's 2.6. I would say that's 2.6. You know, if these markets stay high, everyone has more money. So I can, you know, I understand that case. I definitely understand that case. Hey,
all right, well, thank you very much. Have a great day.
Okay, have a great one, man. Have a safe one. What you can also do, folks, this is something to keep your head wrapped around. You know, if his wife had that stock, you know, for a good period of time, guess what? You can sell the enough to get your principal back, keep the profit in there, and basically you're going to roll the dice. But you're rolling the dice with not your original principal. You get your original principal back. Because there's no doubt that what we have had is that the niche players, there's a few niche players, and Lululemon would be one of them, you know, that have got traction. You know, that being said, each and every time when you're in a consolidation, and this is a monster consolidation, the first time it hit this high was May of 2012, and it's a clean consolidation. You know, and it's a big one though. The top of it's, you know, the 84 bucks. The bottom is 36. So I was like, okay, you know, can't bust them up. You're gonna bust them down, and a lot will also have to do with March 28th is a long time from right now. That's the other side of that. Let's go to the XAU, the HUI. XAU out here, that is trading down 83 cents. This is coming back inside where it broke out from. Yeah, we're going to have lighter volume out here today, but bottom line, that sets up this can test 85.96. Right now, you're at 86.64. We take a look at the Gold Bugs Index. We are at 194.57. 193.15, that's what it looks like. This will be interesting. And what I think we're going to have here by the end of the day is this, is that as you have come down, you know, yesterday we got a little volume out of the HUI. You're going to see lighter volume out here today. Let me go pull a few of these up. I got AEM, an Eagle. Yeah, see, that's nice. That's down 29 cents, just filling the gap. Pull up Barrick, ABX. Now, Barrick would be the dog. That's still nice, too. Okay, so Barrick's pulling back 25 cents. 8 million into 15 million. We go take a look at Newmont. Yeah, Newmont hit 39.65. That's going to be a toss-up. Oh, no, it's not. I see what's going on. That's 3.2 into 6.9. Yeah, so just bringing up those first ones that I just brought up, folks, those are some of the largest weighting structures inside the XAU and the HUI. So that's saying that that also is rejecting lower price yet, you know, and it will have lighter volume. The real question is going to be, do we get a sign of strength right after that? We take a look at silver. Right now, silver's trading 17.09. It's got light volume, but bottom line is that, you know, well, like silver and gold, they're both confirmed ABC structures on the way up. You're pulling back with light volume. Consolidation still in place. A lot of it is going to more than likely still have to do with this U.S. dollar. If you're banking on the dollar, I like the trade in the dollar down to that 82.50. You know, each and every time the dollar tries to get higher, just can't handle it. You know, if we take a look at this dollar yesterday, had every chance to get up and stay over the 89.180, and then end up closing at 89,131. It hits today, you hit up to 89,480, and right now we are at on the continuous 89.05. So bottom line, still can't catch a bid. That should still keep a nice floor under commodities. You stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Dow right now is down 324. You get the Nasdaq off 58. S&Ps are down 26. We go take a look at the volumes out here, and what you want to be watching, folks, is that do we go south on volume? And it's going to be interesting. We're going to. It looks like we're going to. Right now, you get at 635 inside the New York Stock Exchange. That says that thing can get to 950 or even $1 billion today. Because the last few minutes, that's when the juice really comes in. If we go take a look at the NASDAQ composite, and if we do get this down on juice, that brings your probability higher that this thing can get some follow-through. Yeah, you're going to have it in the NASDAQ, too. NASDAQ is already at 1.892. That means the NASDAQ's going to come in at 2.2 to 2.4 billion. They'll lay this in coming into the close out here. So we'll see whether, you get another basically gap away. The S&P kind of gapped away nice this morning. We got down to the it opened at 282.60. Got back up to the 284.73 and almost closed the gap. And I expect what we're going to see there is we're going to see a bunch of volume come in at the close there. If we take a look at the NDX 100, excuse me, folks, NDX 100 also has volume, 41 million. You know, what we also have, this is where we're coming into window dressing. This is where not only just window dressing, we're coming into the Fed has a statement tomorrow at 2 o'clock. And guess what? Then we're dealing with Apple, Amazon, Google, let's see, Facebook. Big NDX 100 stocks, folks, monsters. And they will be the news the next couple days. And they will be the movers inside that NDX 100. The NDX 100 itself can drag markets up and can drag markets down. You stay right there, folks. We'll be coming back with some numbers right after the close. Dow Industrials right now down 319. Nasdaq is off 55. S&Ps are off 25. Yeah, and then we're going to have Jobs Friday, too. So we got it all out here. Stay right there, folks. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To begin a great relationship, know what you want. Know what the needs of your body are and what the needs of your mind are, and what fits well with you. There are millions of men and women, and some of them will make a good match for you and others won't. The two of you only need to be like a key and a lock, a match that works. Market wise, let's take a look at it out here. We had the Dow Industrials close down 362. Nasdaq off 64. S&P's down 27. Not sure where they got the red paint, but we got some red paint. Sherwin-Williams must have ran out of green paint, folks. Gold contract down 320, trading at 13.37. We have silver at $17.09. Light sweet crude down $1.18, $64.38 a barrel. We will have the API numbers coming out at 4:30 this afternoon, folks. We'll see where that shakes out. Notes: 10-year note down 5 ticks, 121.20. 30-year bond off 23, 147.13. King dollar down 81.6, trading at 89.05. The euro is at 123, almost 124 to the U.S. dollar. The yen is at 108.82 to the U.S. dollar. Our phone number is 927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we're at a 28.24. So you come off the highs. Bottom line, we take a look at the volume out here. What I expect you're going to see some volume. We're 914 million inside the NYSE. We take a look at the composite, NASDAQ composite also. Now, the composite gapped off the highs. So bottom line is that that's always dangerous when you're gapping off highs. And I can make the case, actually, this is pretty interesting, actually. You can make the case that you get a little island top inside the composite because what you have two separate windows. You get the window when we gapped higher on the 23rd, and now we just gapped lower out here. So we take a look at the composite. The composite out here, 2.1 to 2 billion. Bottom line, that is saying that you could very well get some follow-through on the way down. We're going to have a huge amount of earnings coming out. And we're going to have the ones that we're talking about can move markets. If we go over and just look at Facebook, Facebook is coming out tomorrow, 4:15. Facebook's trading at 187 out here. Traded down as low as 181 today. Rejected lower price. This still looks like it's in a consolidation, though. It's a consolidation that is higher. There's no doubt about that. But the consolidation is out there with the 82 to 175 game. Now, what Facebook did out here, let's go to Bitcoin for a second, because with Facebook has been doing a lot of announcements, XBT, what their operating system was, which they want to do. Bitcoin today, Bitcoin took a hit. That's down $1,129. You're trading 10,077 right now. You get a high volume spike at 91.85. You have a gap that's opened at 83.28. Now, let's take a look at this, because what you also have is that you had Ripple down 12%, you had Ethereum down 9%, you had Litecoin down 8%. Now, you can see inside the CBOE, where they trade futures inside the Bitcoin market, and the CME, where they trade futures, that we had an expansion up here today. This is pretty cool watching this. So when you're looking at the CME, folks, if you're watching Tiger TV, you have to multiply that times 5. The reason being is that the CME trades in 5 lots, so that'd be like approximately 50,000 per contract, where the CBOE trades in 1. So bottom line is that what you have there, those are the volume stats that we do have and will have going forward. So when we take a look at going all the way up to the price point of this 19,000, it's going to be intriguing watching this whole thing shake out. So what Facebook decided to do today is that they are banning ads tied to Bitcoin, cryptocurrencies, and they're doing an overview to see basically, if they want to take these ads anymore. Because of the amount of fraud that actually is out there in many of these things. Gold contract. What do we have with gold? Gold contract out here. We are on the J contract right now. This just rolled over. Gold down $4.30, trading 1,340 bucks. 395,000 contracts. Now we got to catch a bid. We're going right back to where we broke out from. We broke out on this contract at 1326, and right now you are at the 1340. So we'll see how it handles that number. If we go over to the GDX and see how some of the equities handled that number, that's good. Okay, 37 million. We had a contraction of volume. We did 59 million yesterday. It did 37 today. What this does need, though, is that now you don't need a rejection of lower price. 23.39. Well, you know what? Yeah, you slightly had it today. It's a close call, but you did get it. So we'll see if the market basically wants to catch a bid. We go into the dollar index. The dollar index certainly continues to get sold. The index out here today, what we had is that it got to a high of 89,480. Couldn't handle it. It's at 89.05. That's on the short-term basis. Larger term, what you have is that you have a very large ABC structure on the way down. Let's go take a look at some of the earnings out here. You got Allergen. Allergen closed at no, Align Technology. Sorry, Align Technology. This is the vision system for your teeth. That closed at $270, down $669. That is trading at $291. So that took back what it had given up, and $291. That looks like it's going to be an all-time high. Yep, it's going to be an all-time high. So let's see what they have to say. They're paying up. Whatever's in here, I'm not sure. Okay, so the revenue, net revenue, the estimate was $396. They did $421. Boy, there's a lot of different numbers in there. Bottom line is that the market is buying it, and the market is bidding it up $20. You stay right there, folks. We're going to be coming back with our man, Mr. Andy Heck. Dow Industrials right now closed down 362. Nasdaq off 64. S&P's down 29. We're going to be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 362. You had the Nasdaq off 64. S&P's down 29. Let's go over to our man, Mr. Andy Heck, as we do every Tuesday and Thursday. And, of course, don't forget, folks, Andy's got a great show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Now, remember, you can get all this programming right on your cell phone. You can either go to TFNN.com, hit Tiger TV. You can go to YouTube, hit TFNN Corp. Going to come right up. bottom line. Andy also got a couple great newsletters. He has his weekly newsletter, the Technometer Commodity Report. He has the daily, which is the Daily Essentials. Either one of those, folks, you can come test drive, 30 days, absolutely free, money-back guarantee. You go to TFNN, newsletters. If you'd like to get the Technometer Commodity Report, you do investment newsletters. If you'd like to do the Daily Essentials, go to trading newsletters. Andy Heck, what's going on?
Hey, how are you, Tom?
Well, I'm doing good. How you doing, man?
I'm doing good. I'm doing good. So we're getting a little bit of a correction here in the stock market. Say bonds. I think, listen, we're coming into this Fed meeting.
Yeah.
Market's expecting a very hawkish tone to whatever statement they're going to put out. I don't think anyone's expecting an interest rate hike. But Janet Yellen's last meeting,
right.
Probably leave it on a hawkish tone. We did take a look. If you look at the weekly chart of the U.S. 30-year bond, we did break or probe below critical support, which was at 147.04. We're above there, but we're not far above.
No, we're not.
Right, and that's a big number.
Yeah, let me bring this back, because that's the if we break that, folks, this will be the first major break, and let's see. Yeah, you know what? I got a break of it. So I have on a continuous contract, folks. It's 147.07. We got to 4, and that's the first time that we broke a major swing point since 2000. That's pretty intense.
Right, yeah. 18 years. So, stocks are juiced, man. So, we're in earnings season, and we've had 2 down days in a row. You're going to start, if you have a third and a fourth and a fifth down day, we continue to go triple digit. You're going to get a little bit of a scared people in the markets. No question
I suspect there's people in the market that haven't had a down day or a down week.
Yes, or a down month, or a down quarter.
It's been it makes sense, right? I mean, it's
of course.
Time.
We had a sell-off for 6 weeks at the beginning of 2016.
Okay.
That fear has faded in the market's rear view mirror.
Yes.
And so are we overdue? I think we're way overdue for a correction.
Yeah.
Tom, when we got down to those February 2016 lows, the Dow Jones Industrial Average was at 15,500.
Wow.
We're over 70% higher in less than 24 months.
Right.
That is crazy, in my opinion.
Listen, what you're hearing, folks, is no doubt when you've been in the market for a long period of time, these things don't happen. But guess what? It did. And what also happens, and this is where the big heads up going to be, man. If, in fact, no one knows what this experiment has, brought, meaning that, bottom line, pushed a lot of money into it, the marketplace, and okay, is it going to get sucked out, or is there going to be more money that gets pushed in? We'll find out.
Right. But it's a very interesting time, Tom, because you got a really divergence going on here. You got the dollar going down. I mean, we're not far off the lows in the dollar.
Right.
And you got the bonds going down.
Right.
Higher interest rates should be supportive of the U.S. dollar, but they are not. So
that's because Europe and Japan's on fire.
That's right. That's right. And that could be signs of inflation, because these central banks, unlike the Fed, continue to pump liquidity at very low interest rates into the system. So if bonds are going down because of inflation, if we find that out, that is highly bullish for commodity prices, for gold, for silver, for everything. Now, interestingly, we're seeing grains tick up. We got soybeans back at $10 a bushel. We got corn at $3.60. That's a breakout. We got wheat up around the $4.60 level. Very interesting. Now, we have the uncertainty of this planting, growing, and harvest season coming up.
Yes.
But certainly the lower dollar is spurring U.S. exports and imports from other areas of the world of U.S. grains. So the bottom line here is, if this is inflationary, and I continue to believe that Mother Nature could really spike inflation this year. If this crop year is not like the last 5, we could see really big moves in the grains from the current levels. And if we were to get big bull markets in corn, soybeans, wheat, and other grains and soft commodities, then, you know, all bets are off. That's going to filter through right into the inflationary figures here. And when interest rates rise because of inflation, that's bullish for commodities.
Yeah, no,
and that makes sense that the dollar would go down in that environment.
Right. It's going to be an aspect of what is the real rate of interest, folks. That,
right.
You know,
real interest rates.
Yeah.
Real versus inflation.
Right.
And, you know, right now, you know, I'm looking at these rates. There's a lot of room for these rates to go up if there's inflation.
Yeah, I'm going to bring this over. I was just looking for this article. So what happened today, folks, is the Case-Shiller Index come out, right? Mm-hmm. I'll put this up, and when you see this, is exactly what you're talking about, because, you know, Andy, we talk about this a lot, that, hey, listen, man, you know, housing's going up, food's going up, schooling's going up. This is quite a number, though. They had this in here today. So home prices continue to rise 3 times faster than the rate of inflation. The S&P CoreLogic Case-Shiller National Index year over year has been 5% or more for 16 months in the 20-city index, and has climbed at this pace for 28 months. 28 months.
Wow.
Okay? So the bottom line is that this has been kicking in, you know, and that's a big number, man, and that's our housing.
Big number.
Yeah.
That's a big number.
What I didn't get, this is what I wanted to get down to. So, and what it is, folks, and when you get down here, this is where I wanted to bring it into, it's the commodities. What they're saying in here, they get down more, okay, so let's see, from 2010 to the latest month data, the construction of single-family homes slowed, with single-family houses coming down. What they talk about in here, though, is that the boom in the prices of building single families, building in general, has been going up more than inflation also. So it's the cost. It's the cost input also that, guess what? If you can't buy the materials, folks, guess what? You know, you're not going to have houses. If the material is going up, and that's what we're talking about, whether it's lumber, whether, you know, the bottom line, that's
copper, whatever. Yeah.
Exactly.
Yeah. No, it's true. And we're also seeing a bit of a bifurcation in the real estate market. You're seeing some softness in some high tax states, and you're seeing real booms down in Florida, here in Nevada, and other places where you know, people are escaping high tax states.
And they have been for a while anyway. This is this could be just the tipping point, right? I mean,
this could be the tipping point.
It's going to be the tipping point, I think, folks, for like $400,000 earners. It's not going to be the tipping point. You know, if you have cranking $5 million or something a year, they can.
But then again, in California, people own houses that have appreciated crazy amounts, and they're bailing out and coming here, even if their earnings aren't that high.
Yeah. Here, stay right there, folks. Andy and I are coming right back, and don't forget, Andy's going to be coming up right at 5 o'clock. Just go to YouTube, hit Tiger Corp. Come right up, right there, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials basically took a hit out here today. You had the Dow trading down 362. You had the Nasdaq down 64. S&Ps are down 29. We're talking with our man, Mr. Andy Hecht. We are talking commodities, and I got to bring this up, Andy. Look at this. This is, you can tell that marijuana, cannabis is going mainstream because this just popped up in the Bloomberg. And what it is, folks, is that marijuana mapped a price of weed across the U.S. Look at this. Okay, so it's relatively cheap in Seattle, L.A., San Francisco. Cheap in Seattle. L.A. and San Francisco are competitive, but it's an entirely different story in the East Coast, especially in the nation's capital. Let's see. What is it? I'm trying to figure out. Oh, price per gram. So Boston's $11. Chicago's 11. What is that? Miami's 9. Los Angeles 8. I wonder when they're going to start doing futures on this, Andy.
Yeah, they're gonna as soon as the federal government capitulates. That's by the way, that'll come out as quick as Bitcoin did once the Justice Department gets it. They can't do it with the Justice Department leaning on it.
Right. No, that's for sure. That's for
right.
sure.
Yeah, hey, are you kidding me? That'll be the biggest agricultural commodity that trades. There's no question about it.
You look. Oh, so I see the difference. I see what they're saying now. Seattle's $7.50. San Fran's 9. That's because it's been legal so long out there, probably, right? Yeah.
What's Nevada?
Nevada, oh, they don't have it yet. I wonder why.
They tax it a lot here.
You better call them up. Phoenix is $9.35. Denver is $7.70.
I'll tell you one thing. When I drive to the Strip, like on a Friday night, if I'm going to meet some people,
yeah,
and you pass some of the dispensaries, the lines are around the corner.
Really?
People take a Uber or Lyft from the airport right to the dispensary before checking into their hotels.
Yeah. Now, how long has it been legal? It's legal in Las Vegas, Nevada, right?
Everything's legal. Totally medical and recreational.
Right.
It's been legal since, I think it started in July of last year. They voted for it in the November election. It took about 6 months to organize everything.
Yeah.
Get the licenses in line. You know, everyone who does business here in Nevada has to have a license. I have a license, you know, to do the radio show and to do my writing and all that kind of stuff. And you know, the license is a couple of $100 a year. You have a City of Las Vegas license, then you have a state license. But if you're in the marijuana business, ooh, the license is expensive. thousands and thousands of dollars.
Yeah, it makes sense. It's crazy.
Taxes, tax it.
Yeah, politicians will tax anything and everything.
They'd love to tax it. Are you kidding? And now, you know, we got the big news here is Steve Wynn.
Oh yeah, there's no doubt.
That's big news, and that has cratered that stock.
Yeah, it did. It got a bounce today, but bottom line is that we just went from 203 down to $160. You know, it closed at 171.
I got to tell you, I think that stock is a buy. I think that stock is a buy. I think once all the dust settles, you know, whether he, say he leaves the company, this is still a franchise, and they're doing real well in Macau.
Well, and 3/4 of their revenue is out of Macau.
Right.
So,
and they're making money. People are coming back. Vegas is getting busy again. People are at the tables. People are losing money, and that's good news for these stocks.
Yeah. He is I guess, the thing that's amazing is that, what happened, folks, you don't know this. I mean, he was one of the first big movers that made Vegas what it is. And when
he started in Florida in a bingo hall.
Yeah, and then he lost the Mirage, though, for the same type of, well, not the exact same type of shenanigans, but the bottom line is he lost it because of governance.
Right. Well, he didn't have enough shares, and Kurt Kerkorian stepped in and bought it out from under him. And it was probably the best thing he ever happened to him, because he was able to turn around and build these win. I mean, he did a very good job.
Yeah, and now he just started another one, right? He just started another one right across the street.
Across the street, right? And he's also building something, I think, in Washington D.C. He's building
one in Boston.
In Boston,
yeah,
I'm sorry,
he won the franchise in Boston.
Right,
Right.
He's building in Boston. So the thing is,
and there's plenty of bettors in Boston. This coming weekend, man, there's going to be so many bettors in Boston. It's insane.
Oh, they're all going the same way. They're all going the same way.
I'll tell you.
The West Coast, we're left out of it. We got our hockey team. Tom, you and I, Tampa and Las Vegas, two best hockey teams.
That's pretty cool.
Two best records in hockey.
Yeah. Now, do you guys get a lot of fans out there too?
I'm telling you, I've gone to a couple of games. The place is rocking.
That's great. That's great.
It's rocking. And everyone's wearing Golden Knights jerseys in the streets. And I mean, this is an anomaly, because this is an expansion team, and expansion teams don't compete.
Yeah.
This team has the best record. In that, they're vying with Tampa for the best record in the NHL.
Right.
I mean, they lost 3 times at home in the first half of the season.
Yeah, so, I mean, Tampa's the same way. People love hockey. Folks, the thing that's amazing, right, is that, in both cities, though, I think there's a lot of transplants, okay?
There are.
And what the difference is that you're not freezing in the middle of the night going to hockey.
Exactly.
You go there.
I gave up my team. I gave up my Rangers, and I'm a Golden Knights fan.
Yeah, well.
Hey, by the way, oil's going to move on these API.
Oh numbers. Yeah, oh my God, they're out right now. Hold on, let me get. We're having too much fun here. Let's see.
We're talking hockey.
Crude oil. I love hockey. Okay.
We'll face off in a Stanley Cup. That would be nice.
Let's see. Okay, here we go. So crude inventories increased 3.23 million barrels last week. You had Cushing drawdown of 2.38. Gasoline was up 2.69. Distilled was down to 4.1.
Okay, kind of mixed. The distillate is a little bullish. I think the market was expecting an increase in inventories. Don't forget, rig counts went up by 12 last week to 759. All in all, I would say the tone of the market will remain a little bit soft here, but we're at $64.50, Tom.
Yeah,
this thing could very easily go down and take a look at the a 50 handle and then come back.
You know what I wanted to talk to you about? I don't know if you see this Exxon deal today. This is crazy. Exxon is saying, ExxonMobil, the CEO came out this morning saying, it's not crazy, it's great for all of us, that all in, meaning the exploration, the building the well, taking the oil out, getting it to market, $15 a barrel.
We're here in the U.S.?
Yeah.
Beautiful thing.
And this is what's going on here, folks. This is material, okay? You can't come out here and say this. This is the CEO of Exxon, and he's saying that he's going to get 600,000 barrels a day for 7 years out of what he bought in New Mexico from the Bass Brothers about 5 years ago.
The United States is the world-leading oil producer for the next decade.
That's amazing, man. I mean, it's a great number.
It's a great number. Well, you know, lower regulation costs have fed into that, and the bottom line is, hey, you know, this Saudi Aramco thing is going to come to market. This is going to be very interesting.
They better hurry up and put it out to market, man. I'm trying to figure out whether this story here today is what whacked the oil market, because I looked at this and I said, oh, you got to be kidding me, man.
So I think it has something to do with it.
Amazing. Folks, you stay right there. Our man, Mr. Andy Heck, is going to be coming up in 20 minutes, growling and prowling with you. Andy, thank you so much, man. Have a great one. Look forward to the show in 20 minutes.
Thanks, buddy.
Thank you. Stay right there, folks. We'll come right back. We had the Dow finished down 362, NASDAQ off 64, S&P's down 30. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at alumina. Alumina closed at $241. This is trading right now at $243. Let's take a look at this, see where this is at. So she's still at highs. Numbers go like this. Earnings per share, the estimate was $1.25. They made $1.44. Revenue, $775 million. Not a bad number. ADM. Let's go take a look at AMD, rather. Advanced Micro Devices closed at $12.87. This is trading at $12.89. Bottom line, that's staying right where it's at. Also, AMD. 1 second. That's the difference. No, AMD, okay, they closed at 1287, trading 1282. Okay, so they had an estimate of 5 cents. They made 8. They see first quarter revenue coming in at 1.55 billion. Their fourth quarter revenue was 1.48 billion. They're changing the way they recognize revenues to comply with new accounting standards. Bottom line is that, yeah, that's hanging right where the stock closed. The stock did close down 45 cents today, but no big deal. Yeah. Let's go take a look at Juniper Networks, JNPR, Juniper Networks. That closed at the price point of $28.32. That is trading at $26.20. Let's see what Juniper has to say. So Juniper Networks, the estimate was 52 cents. They made 53. They're going to increase their quarterly cash dividend. They have a new $2 billion buyback authorization. Evidently, they need a buyback authorization. Let's see. Let's see. So Juniper forecasted earnings per share for first quarter. The guidance missed the lower analyst estimates. The estimate was 42 cents. This is quite a miss. This is pretty amazing. Now, this is the first quarter adjusted earnings. The estimate was 42 cents. They looked to come in at 22 to 28. Gross margins, they were at 61 estimate. They're coming in at 57 to 59. That's why you see that buyback in there. They need that buyback. Let me pull this back a bit and see what we have here. Yeah, it's still in a consolidation. So this has been in a consolidation for a long period of time. It had a downdraft in 2011, hasn't been able to get out of it since. You can actually, this is pretty amazing, actually. You can go back to 2004, and it's still trading at the same price. Let's go take a look at Chubb. Chubb closed at 153. That's trading 151. And Chubb, I believe, is in the property and casualty insurance business. Let's see what numbers they come up with right now. Okay, so the consensus was at 229. They came in with 228. Pretty close. The net premiums, they wrote $6.496 billion in insurance. Big number, man. There's no doubt about that. So let me pull this back for a second. Yeah, boy, that's been a one-way rocket ship. So Chubb in 2009 was 30 bucks. Bottom line, you get a 45-degree angle. It's actually about look at that. That's almost a perfect triangle, actually. It's pretty amazing, no doubt. Tomorrow morning, folks. Tomorrow afternoon, big numbers tomorrow afternoon. You have Facebook coming out tomorrow afternoon. We have, that's going to be one of the biggest. Oh, Apple, I believe. No, Apple, let's see. Apple's going to be in the first. So what you have with Apple out here today, Apple's down 99 cents. You had volume behind the move again on the way down. You've come off the high. 7 days, Apple's down from a price point of 180 to 166. If we put this on a weekly and take a look at it, it looks like Apple wants to come back to where it broke out from, which is like the 163. And news-wise on the Apple, what you do have is that the U.S. Justice Department and the U.S. Security Exchange is investigating whether Apple violated security laws concerning its disclosures about software update that slowed iPhone models. You know, now, you know what's intriguing about this is that if you're Apple, Apple's not worrying about the SEC. The Justice Department, that's a whole different ballgame, you know. You normally don't see the Justice Department investigating, basically public companies, unless something was going to come down. Think about this for a second. We had the crash, the depression, or whatever you want to call it, in 2007, where there was fraud all over the place, right? And guess what? Nothing happened, right? And the news was not that the Justice Department was investigating any of them. You had the SEC, and the SEC, I can't think of one major banker that went to jail. And as I've said many times, the amount of loans that were thrown out into the public marketplace, it was a clear violation. There's no two ways. They paid hundreds of billions of dollars. So Apple has a few problems ahead of them. Now, Apple's coming out at 4:30 on Thursday. Google, we go take a look at Google. Google is going to come out at 4 o'clock. Google closed down $11 today. Yeah, let's get a little volume off the highs. So what we do out here tomorrow on Google is going to be a big number, because Google's been a one-way trip also. So Google, look at this, folks. In 5 months, Google has doubled in price. Doubled. $5.15 Google was in July. And the king dog, Amazon. Amazon is also coming out on the Thursday. Amazon is pushing highs with volume. Amazon's just amazing. And Amazon, this run here started at 968 on earnings in October. That's how dramatic it is. So when Amazon, what you are going to see is that Amazon and Google are simultaneously going to come out at 4 and 401 on Thursday. What that will do is that's going to put volatility into the last 15 minutes of trading inside the NDX 100. So if you haven't test drove the Nadex platform, go over, hit the platform, bring it up. You get a demonstration account. You'll be able to see how these volatility trades work. And what a volatility trade is, folks, is that you're going to go long and short. Because what happens is that if Google and Amazon go the same way, that NDX 100 will move like 30, 40, 50 points at about a heartbeat before the close. You stay right there, folks. We'll be coming right back. And, of course, I'm Mr. Andy Heck's going to be coming up, growling and prowling with you. The Dow finished down 362. NASDAQ down 64. S&P's down 30. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome, folks. And so Renaissance Technologies, folks, happens to be the most profitable hedge fund and has been for years. It's actually a closed hedge fund. They had a letter in December. It's February now. It will be. But bottom line, this letter says that so Renaissance Technology, the world's most profitable hedge fund, said there's a significant risk of a correction in prices and preparing for possible market turbulence. While accelerating global growth, corporate tax reform, and business-friendly administration in the U.S. have contributed to market gains. This is their quote. It's not clear that these factors justify current valuations, especially in light of the sovereign debt levels. Ed Hebner, the quant firm's head of risk control, wrote in a December letter to clients this month. The best global economic growth in 7 years has helped stoke the multi-year rally in stocks. The current S&P price-to-earnings ratio is 18.6 compared to 11 in 2011. May be justified if volatility remains low and the 30-year bonds remain below 3%, Hubner wrote in a letter seen by Bloomberg. However, with higher rates and more volatility, a distinct possibility, there is significant risk that the asset prices will correct. While the fear of missing out may not be a concern for the equity investors, increasing euphoria mixed with a bit of complacency certainly is, he said. Historically, low levels of volatility may well have given investors a false sense of security in the nearly 2 years since the last market correction. Hebner also cited the flattening of the yield curve as cause for concern and said there are technical pressures on treasuries that may further weaken bond prices. Who is going to buy the paper the Federal Reserve accumulated during the years of quantitative easing? If the Chinese reassess their appetite for U.S. debt, rates will have to move up to finance the projected $700 billion U.S. deficit this year. The firm Renaissance International Equities returned 15% last year, according to the letter. Bottom line is that, guess what? We'll see, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Have a blast with it. Look forward to speaking right back here, 9 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.